So, first of all, what is model number 3? Well, I don't think this is going to be a productive session unless everyone knows exactly what we're looking for. So, real quick, what is model number 3? Well, let's
All
take a
right,
look.
guys, we're on to the much anticipated model number 3 full lecture. Most of you already know it by now because I executed it countless times on stream, but now we're going to sit down and put it in very, very specific rules that make this amazing model just work over and over and over again. And we're going to be overviewing 2 examples. Okay, we'll do another back testing.
So I'll just show you guys one example so we can make this real quick, and then we're going to get straight into the back testing session, okay? So just so we all know the ground rules and what the model actually is and what we're looking for. This is probably the number 1 most executed trade that, we take live on stream. And pretty much we're just going to show you what it is, and then we're going to dive straight into FX replay, and we're going to do about a month worth of back testing on it and all the good stuffs to come there. And I believe it's going to be eye-opening, and it's going to be a very, very powerful session. So let's get to it.
I promise. But for now, we're going to be doing the most 2 recent examples in price that we actually traded. So I don't really like getting back in hindsight and doing that. But whenever we have ones that I actually traded, we're reviewing the one that happened today. And we're going to be overviewing one that happened last Tuesday. Starting on the 4-hour chart here. The very first thing you need for model number 3 is you need a key level tapped down into.
Okay, key level.
And in this case here, for today's example, we obviously had a very clean higher time frame level tapped into. So a very clear and large pool of liquidity has been ran from the marketplace, and we're tapping. If you go to your weekly chart, you'll see that we tapped the very low of that weekly for value gap. So we have a discount array, and we have a significant pool of liquidity ran from the marketplace. So we have checkbox number 1 to start model 3. Now what we do is we're going to drop the whole way down to the 5-minute chart. Now what I want you to see here is once we pierce and trade into this key level, what have we been doing in the session prior? We have been significantly dropping down. And whenever we're looking to buy, okay, you can flip-flop everything I'm saying here for a sell model with model 3, okay? It can all be done inversely. But whenever we're looking at this context here, we're looking for a buying setup, and we see that the market has significantly dropped lower into a key level. Once we see that, we begin to look, okay, where is everyone's stops going to be trailed at from those who have been making money? So what you need when we're looking for a buys with model 3, you need a very large rundown, okay, a nice drop down, and you need specific highs placed in and left behind. So once we reach this key level, you want to identify where it's at. In this case here, we have buy stops here and buy stops here. You can look at here, but really all you need is up here. More than enough profit can be made from buying down here and getting covered up here. So this right here is the framework for model 3. We have a large drop down, and we're leaving behind trailed buy side liquidity above this high, and this high. So what does this mean? What are we essentially doing when we're utilizing model number 3? We're attacking those who have been making money.
All right, boom. So keep it short and simple. I just want to lay out the ground rules. That's pretty much all you need to know. We're looking for price within the New York session or PM session. Really doesn't make a difference, but more specifically New York session. We're looking for price trading down to a higher time frame key level, and we're going to be attacking those who have been making money in the session. So in this example here, right, price severely drops down, right? It's just been trading down. Who's been making money the entire New York session? Sellers. And when can I anticipate to utilize model number 3 to buy into opposing buy stops that are left behind from those who have been selling, right? When we reach a higher time frame key level like I showed in this example here. And then all you have to do is find the entry model. So it doesn't matter what you utilize. You can use an inversion gap like right here. You can use an order block for value gap breaker. It doesn't matter. The PD array that you utilize to complete this model to go against the grain, right, is, it's just a stepping stone. Okay, so with that in mind, we got that out of the way. Okay, now we can get to the fun stuff. All right, so let's get out of this. And first and foremost, let's get this nasty indicator off my chart because that is absolutely not needed. So let's see if I can get that off. There we go. Beautiful. Look how much better the chart looks now without that volume index on it. Anyway, all right. Quentin Mills, good morning, brother. Good morning. But anyway, all right. So we know the ground rules. We know what we're looking for model number 3. Now what we're going to do is we're going to get in here and backtest. Now, please just note before we get into this that this is my first time ever using FX replay, so bear with me here. Okay, I mean, literally, we're starting on the same example I just showed in my actual original introduction to model number 3. So we tapped into a higher time frame key level. It's going to be this previous weekly low here. So sell side's been ran here. Okay, looks like NAS 100 didn't have as prominent of a run down there, but we know on the regular NASDAQ it did. Okay, so we tapped into that higher time frame key level there. All right. And below that, we had a weekly Fourier gap. So let me show you that real quick. Because it just kind of just adds to it. All right. So this is the higher time frame key levels we're working off of, the weekly candle. But anyway, weekly Fourier gap dropped out into, weekly candle retracts down into it. Okay, it's been bearish on the week. And then we find ourselves smack dab in the middle of this weekly gap. And not to mention, we can also throw in this weekly order block here. So this down candle here pushes up above this previous monthly high here. This down candle is the last down candle here. We trade down into that there, coupled with this Fourier gap. Okay, now with that, let's go down to the 5-minute chart. Okay, this here is an example for October 1st. Okay, so we pierce previous weekly low here on the NASDAQ. And we're down into midpoint of this weekly Fourier gap. And we have ourselves a session. Guess what? Where's our 9:30 opening? Right here. What did the 9:30 opening do? It did absolutely nothing other than slam lower. Okay, right out of the opening, out of the gate, we slam lower, up, comes up, makes this high, slams off. What's happening right here? Everyone who's been making money this morning has been on the short selling side inside of the New York session. Okay, so whenever we find ourselves trading down into this weekly array, guess what? We have model number 3 with a structure for it. We can go against the buy stops. All right, cool. So let's go down to the 1-minute chart because that's likely where we're going to find our entry point. And you guys should remember this day vividly. We actually executed this on the live stream, so you should remember this setup here. Do we have trailed opposing buy stops that we can go against the grain and attack those who've been making money? Absolutely, 1,000% right here. These relative equal highs. All right. Now, what did I say? The PD arrays is just simply a stepping stone for the actual completion of the model. We're not taking trades just because the PD arrays. All right, so entry price is going to be, first of all, let me show you where we're entering because this is where we would enter. Okay, so what happens? Model number 3 presents itself. We're down to a higher time frame key level. We create an intermittent term low here, and then we have displacement. That's the last key that we need for model number 3. We already have the framework. We're going against those who have been making money, right? We're into that weekly Fourier gap. We create an intermittent term low, and then we have displacement in the direction of these highs. Beautiful. Okay, it's a little bit tough to see, but if you zoom in real nicely, okay, there's 2 things you can execute on. This inversion gap here, all right? That's number 1. But number 2, and the best one for me, is this small institutional order flow into this Fourier gap. Okay, so it doesn't matter what PD array presents itself for us to take the entry. It just needs to present. Okay, so in this case here, as you can see, price gets that displacement. What does it do? It pierces through an opposing array with this gap here. Okay, you can enter on that, doesn't matter. But in this case here, I'm going to wait for it to have a short-term retracement. Boom, institutional order flow down to this Fourier gap. Okay, buy that. Stop loss goes down here, so entry price is going to be 19,681. All right, anyway, so we analyzed this. Basically, this here is from the institutional order flow on the Fourier gap here. This we're buying in, so 19,680.80. Okay, you're going to get covered at 19,760. Okay, so this would be about an 80 handle trade. All right, so you get covered above the high here. And that's it. So you go against the grain. You really just take right above the first pool liquidity here. So we're going to skip past October 1st. We're going to skip to October 2nd here now. So day number 1, did model number 3 perform? Check mark. Okay, so weekly Fourier gap delivered. We also took previous weekly low right there. Okay, below this weekly candle. So we're delivering off of those key arrays coming into the next day here. Daily chart for October 1st, or October 2nd, excuse me. We deliver half of this wick here, bounce up off of that. All right. And we're going to go down to the 15-minute chart. And we're going to see what did this session do. Okay. All right, let's take a look here. Not too much of a large move taking place here. We have 830 manipulation. Okay. And then price severely drops to the downside here at 930, so this could work. Let's drop down. So basically what we're delivering out of is price drops down, clears all the internal sell stops here. So let's go ahead and map out this right here because it's going to be our previous session low pierced right here. Okay, so that's our key level we're driving down into. So we have sell stops taken here. We have that weekly imbalance midpoint dropped back down into here. That's our purple shaded area, remember? And we're below 930 opening there, so that'll act as our Judah swing. All right, so this session here, since 8:30 a.m., the opening of the kill zone has a specific set of people made majority of the money coming into when we're tapping down in this higher time frame key level to complete model number 3. Well, in my eyes, I view this as yes. So price opens here at 8:30. Okay, rallies up. Engineers these highs up here, slams away. What's taking place? People are placing their buy stops and feel safe above these relative highs that were placed in a premium. Right, so buy stops number 1 got to be placed there. Here we go again. Here is 9:30 opening. Small little rally right there. Matches the internal highs here. And now it's taking place. Price drops down, drives down into a discount. Okay, breakout artists love that. And they're dropping down into midpoint, that weekly Fourier gap. All right. From there, what are we going to be doing? Well, we understand there's resting buy stops above here, buy stops above here, and we're tapping into two key levels. Well, do we have a cemented low now formed and displacement? Yes, we do. So higher time frame key level worked into. We have displacement in the direction of where we'd like to buy into and go against the grain for those who have been selling, right? And then we have a Fourier gap presented right here. What did I tell you guys? The PD array that you actually buy into is just a stepping stone. So right here in this case here, this would complete model number 3. All right. And remember, guys, the time factor into this. What is it? Well, right now it is 9:50 a.m. Okay, so 98% of our back testing session here for model number 3 is going to be with model number 3 in the New York session, right? Because that's, more times than not, that's what's going to happen. So we can find one in the PM session like we did in the last example. Okay, but for this one, it's smack dab in the middle of the kill zone. All right, so this case here, guess what? We're going to buy right here, 19,689.26. Okay, that's where you're going to buy. Where's your stop loss going to go? Below the second Fourier gap right here. So 19,646.87. Does that support our risk management plan number 1? Well, yes, it does, because we can have a 20 handle stop. And then what's take profit going to be? Well, you could get covered right above here for a partial, right? And your full will be above this generated time-based liquidity pool from the 830. That placed that in. And what are we doing? This completes model number 3 because we're buying out of a displacement leg, buying a Fourier gap, and going against the grain for those who have been selling. And we have a bullish bias based on the weekly time frame, right? And we pierced previous session low here, boom, came up off of that, and guess what? This is going to offer us 19,686. Let's say 90. Okay, about 60 handles there, and then up into here, 800 flat. That actually offers around 100 handles there. So we're just gonna play it safe and say that we bought in here and then we got covered above the highs here. That would complete model number 3. Boom. 2 days back to back now. Now it's not gonna be this clean every day, I would assume, right? But 2 days back to back, we have classic model number 3 perform. So far, what do we have here? Well, just write it down because once we get to the actual live time, we can actually start buying and selling with the FX replay. But what we're gonna do here is I'm gonna write it down. So we now have, with these two setups, 140 handles yielded to us, assuming that we're using one contract. So one contract on the NASDAQ, okay, multiplied by whatever leverage that you would use. So if you're using micros, do that. Okay, in this case here, I'm just going to do one contract. So it's $3,500 now offered across 2 model number 3s. Now, guess what? Yes, it's hindsight here, but in these days here, we actually executed this on live stream. Like we're not considering. Notice that we're not considering anything in price. We're immediately jumping into very specific things in the chart here, and that's how you really have to conduct yourself live. You have to filter out all the nonsense that's not really anything there for you, and cut straight into the meat of what we're actually looking for. So when you come back in here and you know what you're looking for, we're easily able to identify model number 3 just like this. So if you're not seeing this type of stuff in the chart, I don't understand why you would be trading, right? So it's easier said than done, but we obviously do this live. But anyway, fast forward. I'm going to do this very carefully so I don't go too far. All right, so what are we looking for here? All right, this is the important part. What are we looking for right now? We're going to be looking for a higher time frame key level to be dropped down into. And most specifically, we're going to be looking for a very large move in the beginning of the New York session or the PM session. So let's obviously extend forward here. Watch and wait for it. Okay, here's midnight opening. Notice what we've done. We really just worked both sides of that midnight opening a lot this far. So let's keep extending the tape here. Okay, not much of substance that I'm see from model number 3 here. All right, so here we go. Here's a very, very large move in the New York session. Okay, gunning for this key level here. Let's see if the model actually performs here. All right, there we go. So there's a huge drop down. Okay, huge rejection away from the highs up here. Okay, so this is actually going to be previous daily high pierce. So that's really only the only key level that we need to utilize here. So anyway, we actually have a very large Fourier gap. Okay, worked in here. So we have our key level. Okay, so we have a very large move inside of the beginning of the New York session, and we have a Fourier gap worked in. So that was tapped up into. All right. And we're clearing previous daily high. And then we have a huge move away from that. So let's see what takes place. Let's go down to the 1-minute chart. All right, so price trades up in the highs here. Okay. Here's that Fourier gap priced in. Okay, what's taking place here? Well, right out of the gate at 9:30, what do? Trade up, create a low, trade up, create a low, trade up, higher low, higher low. So we obviously have sell stops rested below. So let's take a look here, and we're going to go by the minute. And there we go. So let's assume that we'd sell here on a model number 1 basis. All right. So right now it's 2 for 2. Now let's assume that we'd sell right here. Okay, as soon as it taps up into that, let's see if it offers another entry. Okay, pretty strong through it at the moment. All right, so let's say that we're going to sell right here. All right. Stop loss is going to go above, let's see, 44. Okay, it's going to go above the Fairway gap right here. And let's see if it works here for us. Oh, there we go. We're rolling. All right, so we sold the Fairway gap. Remember, it doesn't matter what we're utilizing. Okay, the PD rate is the stepping stone. We're delivering off the 2 higher time frame key levels in the form of previous daily high, hourly gap. And our entry is going to be here. Stop loss here. This will be about a 1 to 3 risk to reward ratio. Okay, and we're simply just going to attack those who have been buying in this New York session. So let's extend it forward here. All right, so right now there we go. So there's take profit right there. Okay, I didn't expect it to be that quick, but anyway, take profit was swiftly hit right there. So this is 3 days in a row of model number 3 presenting itself and working out. So P&L on this day here would be $13,000. Okay, so we sold here, stop loss above the Fairway gap. All right, this is a pretty wide Fairway gap. So like in this case here, I really wouldn't put it above the second one because I anticipate this one to stay open with how large this one is. There we go, 3 out of 3 now. Okay, 3 out of 3. Okay, this is not to say real time you're never going to take a loss prior to actually taking the classic model number 3, right? But what do I teach you guys in every single live stream? Weed out the lower quality price action. We do that every single day, right? And filter in the good ones. And how do you do that? Well, you have to know exactly what you're looking for. We know exactly what we're looking here for model number 3. And 3 days in a row, it presents. We go into the charts, immediately find it, and that's it. This shit repeats, guys. It repeats. It's safe to say that. All right, let's keep it going. We're going to go into October 4th. All right, here we go. So sell there, and we'd simply target what? The 8:30 opening. And who's been making money, right? Well, you can see that we generate these internals here. Okay, right here, that'd be target number 1. A little bit too shallow. So to be honest, this is just like a little bit too complicated of a model number 3 here. So I wouldn't factor this in here. And I actually remember this day we did not execute on this. I believe it was something in the PM session. So we're gonna skip past this day. All right, here's our opening range. All right, so let's see what takes place. Does model number 3 take place here today? Well, let's go to the 15-minute chart. That's where we're always going to start out, intraday. All right, so let's get this thing going. All right, so let's roll the tape here. All right, so not much of a move of substance here. So we're not really looking for model number 3 because it really hasn't moved much inside of this New York session, right? So there's nothing here for the model-wise, right? So we continue. And yeah, really just moving sideways here. Looks like a classic seek and destroy day here. This is on a Monday, so I guess no surprises, right? Yeah, it doesn't really sell off till 2 p.m. there. So to be honest, that was just a classic seek and destroy Monday session. Okay, every single high and low being taken out, and then we slide down. So if I was looking for model number 3, it would be based on this huge drop down at 2 p.m. So let's see if that yields anything. All right, so we have these internal hourly lows here swept into the later portion. All right, beautiful. So that's been pierced here with this huge drop down at 2 p.m. Okay, let's see if model number 3 presents for everyone who's been selling. All right, there we go. So we have now a breaking structure. See if it leads to anything of substance. So yeah, no model number 3 here. So we go into market close now, and it's kind of cutting too close to the chase here. So this Monday here, we kind of cancel out easily just because. Remember, what are we looking for? A higher time frame key level, most specifically from the weekly, daily, or hourly chart, right? And then we're looking for to go against a huge move inside of the New York session or PM session kill zone, okay? And we don't have that here on this particular day. So let's rewind. All right, so we're heading into Tuesday here. And let's see if Tuesday yields model number 3. So far, 3 for 3 in identifying model number 3, okay, inside of this month of October. And let's find ourselves in the New York session, okay? Remember, this session's just going to be for primarily New York. All right, so we're in the New York session. Let's go to the 15-minute chart. And let's see what we're dealing with here. All right, so extend it forward. All right, huge move to the upside. Okay, we can all see that vividly. So we have a huge move to the upside here. Here's our higher time frame key level. So it's going to be a time-based liquidity pool from yesterday. Okay, so all this high resistance liquidity here stacked up. That's now been pierced in the marketplace. So that is going to be our key level we're going to utilize. And we're going to see, does model number 3 perform? Because all we've done out of the gate at 9:30 is slam higher, slam higher. So we'd be looking to potentially on a scalping basis go against the grain inside the session here. So let's fast forward it. And let me see if there's anything on the higher time frame. So pretty much just in a range here on the daily chart. So there's nothing to utilize on those higher time frames there, right? But anyway, the point is we cleared previous daily high, cleared out all that high resistance liquidity that was stacked up from Monday, all right? And all we've been doing, we have a huge move to the upside, and we'd be looking to go against that grain intraday. So let's see if that performed. All right, let's extend it forward here. So just consolidating here, no model number 3. Remember what we need for model number 3 is an intermittent term high formed and a displacement. So let's see if that takes place. Keeping higher. Is there any model number 3? Absolutely not. Okay, it's directional. Directional. This session is only for model number 3 and only model number 3. Okay, so we're 3 for 3 so far. Let's keep it going. All right, still consolidating. Do we have any valid displacement? Absolutely not. This kind of matches the highs up here, trades off. Okay, so we were leaving behind relative highs, so we would honestly still look at this as a buy program. All right. And now we get into the lunch zone. So model number 3 absolutely did not perform this day here. So in this case here, if we're only trading model number 3 and only looking to trade model number 3, right, we'd be staying flat. Okay, so New York session. Okay, all it does is consolidate, slam higher, trade down here, slam to the upside. So this honestly just looks like a classic buy day, not the cleanest movement in the world, but I wouldn't be trying to go against the grain on a day like this, especially when we have drawn liquidity like this, above this. See this wick high right here? Right there. All right, so what I'm going to do is I'm going to scale down. We're going to easily cancel this out for not taking model number 3 because it's directional. Nothing here is suggesting, you know, some type of reversal or going against the grain. Okay, so we're going to go to next session. So, I mean, the draw to me is pretty clear here still. We're still looking to get engaged with this daily high up here. So really, if I was looking to execute model number 3, this is the daily key level that I'd be looking to work off of, right? I mean, that's not really hard for any of us to see, I would assume, right? All right, so what I'm seeing here is out of the gate, 8:30 opening, all we do is trade lower, and I see the generated highs here. Okay, I do see model number 3 with this here, and I remember this day vividly. It was very, very high resistant the whole way up to data high, so this here would be what we're looking at. Okay, so what we're going to do here is we know the draw on liquidity, so we're obviously the bias is bullish, right? So that's going to help us with our directionals, right? So we're looking for price to drop into this key level right here. Does price trade down to a higher time frame key level? Well, in this case, yes, it does. Okay, hourly for ray gap, extend that to the right side of the chart. All right, we trade down into that, discount priced in, so we take our Fibonacci tool. Wow, this is ugly, isn't it? Anyway, we trade down to optimal trade entry, hourly for ray gap, and internal sell stops taken there. So we absolutely 1000% have a higher time frame key level to work up off of. Now, let's get onto the lower time frame again. All right, and what we're going to do here is, okay, let's say right here, here's 9:30, slams down again. What's taking place here? Well, who's been making money this entire session here? Well, 8:30 trades up, creates a high, wick high. What's that? Buy side liquidity. Buy stops are going to be jammed above that high as soon as it trades off, right? And then we trade lower again, generate highs, and then slam down below this internal low right here, back down into that hourly for ray gap. So we're really closing in that hourly for ray gap key level. We've stopped staking here, and then we have a displacement. What are we utilizing? Well, in this case here, it doesn't matter what array is presented, but in this case here, I'm looking at this breaker. So right here, we have a bullish breaker. Price expands up, trades back down into it, coupled with this 1 minute for ray gap. So realistically, we'd be buying right here. So 20,000, let's just say we get covered right up here. 20,170. Okay. 0.68. Where's your take profit going to be? Right up here. Okay, so take profit is 20,272 flat, we'll say. Entry is 20,170. Right? So that's about 100 handles right there. Where's your stop loss going to go? Below the swing low over here, below the protected for ray gap here, and this inversion gap. Okay, so multiple arrays, you're putting your stop loss below. You're going to hold that. Buy here. All right, and assuming that emotions weren't in play here, because it's very, very easy to lose yourself emotionally on a day like this where it's trading back and forth, high resistant, right? Take profit is going to be up here. Now to rewind this thing. And this absolutely is model number 3. What's the framework? Well, we had a very, very large move in a certain direction, trades down to a higher time frame key level, right? And we're targeting and going against the grain of who's been making money, and that's the downside. All right, so right here, buying in here. Let's go ahead and extend this forward. All right, so very high resistant marketplace right here. So to be honest, this is like kind of a questionable day where it's like, okay, did emotions affect your trading here, and did you close out early, or, you know, whatever the case is. All right, so let's keep it rolling. All right, really high resistant day right here. So this is kind of like the oddball of them, and just kind of brings in the realism of it all, right? All right, and eventually, if you would have held the trade here, held your stop loss pull here, it would have never been hit. It looks like multiple times going to run for that, right? But this is just that marketplace where, you know, it's not always going to be, you know, picture perfect. And in this case here, it's far from it. But on this day here, 4 out of 4, this is absolutely model number 3, and you're targeting time-based liquidity above the 830 data high, right? And this here completes model number 3 for a 4 for 4 basis. Okay, so what we have here, 100 handles. Okay, we have to assume that you just have really sharp, picture perfect psychology here, right? So we now find ourselves with $7,300 across 4 trades utilizing model number 3. Like literally just filter out anything and everything other than model number 3. We're looking for very specific things. Higher time frame key level, boom. Do we have a large move in a direction that we'd like to target? Yes. Are we targeting those who have been making money? Yes, absolutely. There's going to be a huge pool of deep pockets with their stop loss above this high right here. And to add the bonus, which is always important for every single trade that I take, the bias is bullish. So it's supporting bullish bias. We're going against the grain for those who have been selling. Right out of the gate, midnight opening. Why is this such a clear model number 3? Out of the gate, midnight opening. We don't even trade above midnight opening. All we do is trade lower into the significant discount. Trade lower, boom, create highs here, generate them, trade lower again. We're going to look to utilize model number 3 in this key level. So right there, there's 4 for 4, 4 examples. All right, so let's keep it rolling here. All right, so here's our 10 a.m. opening here. Let's take a look. So we have 2 key levels to work up off of now. Discount wick, discount for Vega. We can absolutely be going against the grain. Number 1, we're still bullish. This is a very shallow run to that daily high there. All right, we're still bullish. Let's go to the daily time frame. Why are we still bullish? Well, all price did here, it got below. Okay, kind of matches this high, really. And we'd be kind of eyeing up all-time highs right here. See that? So very obvious bullish trend here. A lot of excessive bullish order flow, right? And we'd expect and anticipate price to run through this a little bit more significantly. Okay, so anyway, let's go into the 15-minute chart. So we have a huge rally to the upside here. Right, all we're doing is trading lower, placing in highs, internal highs here, internal highs here. Let's go down to the 1-minute chart because it's where 95% of our entries come from. Looking at this chart here, well, particularly, I mean, this is pretty clear in my eyes. I mean, right out of the gate, 830, like we saw it on a higher scale here, but at 830, price rallies up, trades down, creates a lower high, trades down, and then we enter 9:30 a.m. Okay. What I'm looking at here, number 1, is this definitely embodies model number 3. We have higher time frame key levels being worked down into. All right. We have very easy to see opposing targets right here, this trend line sensation here, and then 830 data high. So time-based liquidity pool here and internal range stops here. I mean, this is pretty obvious to see, and we have a bullish bias, right? Now, what I'm going to show you guys in this context here is you can easily see that this here is a 10 a.m. news read. Okay, so we have a 10 a.m. news driver. So in this case here, let's be realistic. Live time, we will be waiting for that 10 a.m. news driver to come into price. So we wait. It cements an intermittent term low off that higher time frame key level. Do we still have this level untapped? Absolutely, 1000%. Okay, so this can be our draw. And looking at it here, well, guess what? Do we have a displacement? Absolutely, we have a displacement. Boom. Survey gap. Okay, now we're going to find our entry. Do we have an entry in the survey gap? Where is it? No, we do not. So in this case here, it's model number 3. However, you would not have been filled. So if this candle here rallies down, touches that survey gap, right? You enter there, stop loss below, this swing low right here. Aim for 830 opening, or 830 time-based liquidity, as well as all this trend line internal highs stacked up from here. Okay, so this is a pretty easy to see model number 3. However, you just simply wouldn't have been filled. So this kind of brings the realism into it. And we all know that I do not chase price, nor do any of you inside of our live stream. So there simply just would have been no entry here based on model number 3 in this particular day here. Okay, clear? So let's put it in perspective here. We now have 11 days of trading in model number 3, and only model number 3. We have ourselves $7,000, $7,300. Okay, $7,300. Okay, let's be realistic. Let's subtract losses, whatever. You know, subtract 1,000. That's still $6,300 in the month. Okay, you're making $6,300 on model number 3 inside of 11 days only utilizing model number 3. I mean, this truly is eye-opening even for me, to be honest. But anyway, let's keep it rolling here. So it looks like we're actually entering the weekend. Okay, so we're going to go into another Monday. What do you got for us Monday? Do you have a model number 3? What do you got? All right, so right out of the gate, an insane move to the upside, huge move up. I actually remember this day. I believe, if I'm not mistaken, this was actually a bank holiday where the stock market was still open. But anyway, we have a huge rally up here, loses steam here. Let's see if we have a higher time frame key level to work up off of. Let's go to the weekly chart. And absolutely, yes, we do. We have a weekly rejection block here, so all the clean bodies here inside the chart were smoothly delivered. Okay. We obviously cleared out these relative low daily highs here. We have a rejection block here delivered on the weekly chart. And we also have, if you take a look here, what's this up candle right here? Right here. This here's going to be a classic bear short block. So price utilizes up here, trades up into there, slams off, right? The more times it's utilized, the more significant it is. Right, so we have a daily bear short block. And we have that weekly level that we're utilizing, okay? So let's scale down. Scale down, scale down. Okay, nice reaction above for that bear short block. Change this day delivery there. Let's see if this model presents. So let's go down to, what time is it? 10:20 a.m. Perfect timing. Okay. And let's see if this thing performs. So not a clear displacement yet. Is there anything in here, any key array that we're going to be utilizing to sell going against this right here, these two lows right here, right? Remember, what's the narrative here? What's model number 3? Why am I even scouting out on this day here? Midnight opening, all we do is slam to the upside. We place in higher low, excessive higher lows, place in 9:30 opening immediately. Coming above the steam here, what does a lot of people want to do? Buy in on this thing, put their stop loss below 9:30 opening. It happens more times than I can possibly tell you. And there's going to be an enormous amount of deep pockets with their stops jammed below this low here and this low here. So this is going to be our target. Let's see if model number 3 performs. So model number 3 absolutely did perform. We actually had a failure swing take place here. Works up into this gap here, gap here. I wouldn't be selling this yet, but the intermittent term high has been cemented there, right? And we scale down to the 1 minute. Well, guess what? We have a consolidation. Price trades down, trades up here. Okay, this is going to be an aggressive sell entry, but your best model number 3 entry is going to be right here. So here's a Fourier gap. I wish I can go back here, but I can't. Next time we do this, I'll just upgrade, okay, for educational purposes for you guys. I don't need it, but I think these sessions are useful. But anyway, so we have 2 arrays being traded up into here. Remember I said it doesn't matter. Okay, we have a Fourier gap here, and we have an old low being bumped up into here. So where's the entry going to be? Right here. Stop loss is going to go above what? The second Fourier gap. So here's a Fourier gap here they're entering on. We're going to put stop above here. Okay, anticipating this to act as a breakaway gap, which it absolutely should. So 20,416, stop loss above. Okay, does it offer a 20 handle stop? Yes, it does. 436. That's 20 handles of stop loss, and we're going to aim for that time-based liquidity of the pool below 930 opening range low, right? Simple. So we enter here, 20,416. So about 50 handles. So 45 handles. Okay, I want to make sure I got my math there right. So 20 handle stop loss, and we're risking those 20 handles for 45 handles to take profit. So let's do the math here. So we're going to short sell here. This is absolutely model number 3. What took place? Well, we're delivering off a higher time frame key level, and we're going against the grain for those who've been buying, right? So we're shorting, attacking those, and liquidating those who have been buying, right? We have opposing stops, very easy to see, right? Now, we don't need to get covered down below here. 45 handles on a Monday is more than enough. Okay, we're not greedy. This is all we need right here. Okay, not factoring in losses, not factoring in emotional, tendencies or whatever. Okay, 14 days in October. I'll reinforce it to you guys. Let me go to my calculator. $8,425 model number 3. Boom, beautiful. All right, so to keep it rolling here, let's go to October 15th. Okay, I'm going to try to catch it real time this time because I keep going past it, but I guess I have to pay $200, which I'm fine with doing that. I'll do that next time, but I have to pay $200 to actually do everything that I want to do in here. But anyway, all right, so London session. Wow, okay, all right. So we can definitely look for model number 3 here. I mean, severe move right out of the 930 opening here. I mean, that is severe. Okay, and I actually remember this day as well. I mean, I'm looking back on a lot of these days and I'm remembering them. Price slams down, consolidates again, slams down. So, I mean, it's pretty obvious and prominent of a drop down here. We look to go against this green here, okay? So what we're going to do is we're going to map out this right here because it's going to be previous 3 daily lows. Okay, so that's going to be our key level we look to get engaged with. Nothing really on the daily chart that I look for other than these daily lows. So we're delivering out of that weekly level that I showed you guys, and also the bearish order block right here extended out. Okay, so pretty much entering a sell program here with the change of state delivery. Very obvious to see that. Let's go down to the minute chart and let's see if model number 3 presents going against the short sellers here within this session. Wow, actually I wasn't even considering time here, so apologies for that, guys. It's actually entering market close. So this was a day that shit the bed, and model number 3 did not perform because, I mean, it's literally just cutting way too close to the market close, and I don't really trade that. So, I mean, the context was there, right? We trade down to a higher time frame key level, right? We had, all these stops generated above here from a huge drop down, right? So we're attacking against the grain, right? And that's pretty much it. So the only thing that is missing here is time, but this right here would be a model number 3 if it was the proper time of day, right? All right, here we go. Boom, beautiful. So we have a huge drop down here. Let's see if we get a higher time frame key level. Let me go ahead and expand the chart here for you guys. Let's go up to the hourly chart. And let's see here. So we have previous daily low pierce there. We'll check out the weekly and daily chart, see if we can utilize any type of higher time frame key level. Not specifically, other than I would like to utilize this right here. So this here is going to be a classic bull short block. Okay, so I'll just pretty much wait for it to tap down into the opening, okay, for the highest probability. So anyway, let's go down to the 1 minute chart because we have a severe drop down, right? Highs being placed in. What's taking place above these highs here? Buy stops being placed in, right? Easy to see. All right, let's see if we get that opening. Oh, there we go. Beautiful. Opening pierce down into. And kind of just making its way gradually lower. All right, boom, beautiful. So I would look to buy this here. We have a displacement. We have a 3 drives pattern down to a higher time frame key level. We had these stops here. We're going to look to target these. Okay. And realistically, we're going to look for this. So let's see. All right, so we're going to buy here. I was going to look to buy right here in the small gap, but I mean, replay, it's just kind of weird. But anyway, we're going to buy here. Buy is going to be 20,009, but we're going to have to buy a little bit higher, which is fine. So we're going to place order, buy, entry price right here, there. Well, beautiful. And then stop loss, take profit. We're going to set stop loss to be below this Fairway gap here. So that's going to be 20,047. But the real entry is right here. Okay, so the risk, like, we understand what's going on. Like, I literally just push it up 1 minute above, and it only gives me the closure. I can't get the real-time movement. So when we drop down to this Fairway gap here, right, I can't get the real-time entry on replay. So it's kind of a disadvantage of replay here. But anyway, we're going to buy here. Stop loss is going to go, we'll say 20,055. And then take profits, then we're going to go above the grain, right? The first presented buy side liquidity pool for those who are resting their buy stops above here, who have been short selling, who's been making money, and we drop down to a higher time frame key level, right? Then we have the displacement, intermittent term low cemented, beautiful. So what we're going to do here, do we have the proper risk? All right, so we're going to buy here, and let's go ahead and roll the tape here. Okay, well, it actually didn't work for me, but anyway, take profit was hit. So that'll be about, so assuming that we got covered right here, so let's just be realistic and say, here we go. So 60 handle profit, stop loss below the gap, and there we go. So there's 60 handles. I mean, literally 0 drawdown whatsoever on this trader. I mean, a little bit down here, right, but relatively 0 drawdown. So we take full profit above there, going against the grain. Okay, taking out those who've been selling off that higher time frame order block that I had mapped out, but it took it off as I refreshed it, right? We had the displacement, we had intermittent term low, beautiful. Everything there for model number 3 completes it, and that's another take profit. Model number 3 is on hot seat right now, absolutely. And we're heading into New York now. All right, let's go to the 9:30 opening. If we go to the daily chart, see that we're significantly trading up into this up candle here. Okay, and we're also trading up into this huge hourly Fairway gap here. I mean, enormous Fairway gap. So large Fairway gap worked in. All right, and we have obviously a premium priced in, so relative from this high to the low, that's a premium. All right, so we're looking to utilize that out of the gate here on October 17th. I mean, where's the midnight opening here? I mean, just consolidates and shreds to the upside. So immediately, my eyes jump right here. So anyway, we're going to go ahead and map out these internals. Okay, we're up into a key level. So about that lower quadrant of that huge hourly gap. All the internal stops here have been taken. So that's the key level we're looking to utilize. And then we're going to scale onto the 1 minute chart. And we shall see, does model number 3 present itself? So let's find out. 9:30 opening didn't do much, to be honest. But anyway, we take out the internals here. We have a fair swing. And basically, let's see if we can get a displacement here in the direction of targeting those who've been buying, because all we're doing here is stacking up higher low, higher low. I mean, realistically, what's taking place here? Anyone that's been lucky enough to buy up into this session here, right? Where's our stop loss getting jammed below? Right here, here, and now here. And a lot of people, they like to buy, trend is your friend type of thing, and try to capitalize on momentum, right? And they're buying in on every single low that's created, and they're going to put their stop loss below that, and that's what we're looking at absolutely target with model number 3. So does it perform? That's the question here. Do we get a huge obvious to see displacement? And no, we do not. Is there any displacement here? No, not yet. What time is it? And we're actually exiting the kill zone here, so let's see. All right, so we'll go ahead and short this. Okay, so we have a displacement here. We create a Fairway gap. We'll put the stop above up candle, and we look to capitalize on model number 3. We're not going to try to get the hoy down here now because that's severely extended. We'll look for this internal low right here with where jam sell stops will be. All right. So let's short sell. Beautiful. Let's go. All right, let's see if it works this time. Like I said, I'll just use RR tool next time if it doesn't work. All right, keep it going, keep it going. Let's see. And, oh, didn't hit the stop loss. Almost did. All right, rarely just entering a higher resistance state here. So there we go. So there's stop loss. And then we would have lost there 500, or excuse me, 700, 400. So yeah, $500 loss there. Okay, so we're going to subtract 9,700 minus $500. And we now find ourselves with $9,200 there. So there's a failed model number 3. Now, granted, this wasn't the best displacement in the world, right? We're really extended. But this here would capitalize model number 3. We're smack dab in the middle of this hourly gap, right? There's a displacement. And in that case here, we got stopped out. Okay, maybe there's other factors, that I could have considered to filter that out. But real time, as we're back testing, that's what I look for model number 3. Okay, so we're going to go to the next day here. Okay, actually right here, I actually stand corrected. I actually remember this day pretty vividly, but this was actually model number 2 on this down candle here, not model number 3. Okay, so we're not going to cover that. I mean, looking at it here, okay, we dropped down against the grain, but I mean, where are we entering right here? I mean, it's a huge Fairway gap down here, all the way to the upside. Okay, this is just a kind of a dirty work here. So, I mean, very large Fairway gap. We look for, midpoint to be worked in, but we just soared past that within 2 minutes. So, I mean, it pretty easy, self-explanatory to not engage with this, right? But model number 3 tells us we've been trading up. But what is the missing component here, coupled with this movement here that's not preferred, to actually execute with this? There's no higher time frame key level we're working up off of, right? It's just in a range. There's no higher time frame key level to work up off of to short against the grain. And what's the first thing I told you guys in the model number 3 lecture? We need a higher time frame key level to work up off of, and we do not have that, not in the slightest. Okay, so the best model number 3 you're going to get is like some type of clear previous daily high or low appears, to be honest. So, or previous session low, previous session high, that type of thing. So I don't know, we have about 9 examples here now. Okay, every single one of them obviously panned out as model number 3, and then we had 1 minor loss, and that brings us at, like I said, $9,200 across 18 days inside of October. All right.